Hell no, Kobe. We're not doing that, man. I'm
Exactly.
going. I'm gonna
Do it,
keep
bro.
going.
Keep going.
Yeah, especially that's the other thing. That's why I like prefaced when I was kind of asking you, like personally, like as a younger guy, I'm 27. I definitely got another 10 years of like grind mode in the tank,
Mm,
without a doubt. Like I'll be, 37. So it's no big deal. But
close.
yeah. I mean, dude, honestly, I think it's gonna keep going. What else am I gonna what else are you gonna do? Like I don't
Yeah.
know. So
I mean, to that
um
point too, I know
for sure. Yeah, and I guess that's a good like segue into what I really wanted to like dive deep into, which was how do you actually sell an insurance agency and like what are key indicators of sales? Like maybe you do get to that $10 million mark in premium or $1 million revenue. I know that you like to talk the revenue. My mind is just stuck on premium, but you do get to that $1 million premium, revenue mark, and you want to just exit and go into real estate or go into whatever you feel like, go live on a farm and wherever and just enjoy life. What is the process that you've seen some of these successful agencies go through in just a nutshell of selling their agency, um, and how does that kind of play out like in a nutshell from what you've seen?
can I toss a wrench into your question?
Sure.
Okay. And this also kind of goes to our service and what we try to help owners see and do.
Yeah.
And the thing I would recommend is as best as you can, don't just think about selling, but if you have an exit plan of what you know you want to happen in 5, 10, 15 years, and you
Okay.
set that target of, okay, I want to be at this level. I need or I want this type of selling price. I want these things as part of my exit plan, whether it be retirement, whether it be, like you said, exit to go into another industry or other types of investments. Having your goals in mind help you kind of craft the story and the steps you need to take to make that a reality.
I like
Because because if by default you assume, okay, I've got a $1 million book of business, I'm going to sell it for 3 times revenue.
that. Mhm.
It doesn't always happen like that
So what
because
would the story do to help with your I mean, yeah, because I like what you said. Yeah. But then how does that assist in that, reality of that doesn't always play out?
sure. So here's some things to consider that are very relevant. Okay. It's estimated that 3 out of 4 agencies that sell,
Uh-huh.
oftentimes the owner desires to perpetuate internally. Okay.
Okay. When you say perpetuate internally, can you elaborate?
So that means it's a family agency and you want to sell it to your kids as part of your
Ah,
retirement.
okay.
Or you don't have kids that want to take over and you have a VP or a key employee that wants to buy the
Hmm.
agency from you.
Yeah.
Okay. So an internal transfer of ownership.
Okay.
It's estimated 3 out of 4 agencies go through that process. Okay.
That's so odd. I would not expect that, but okay.
Well, here's another stat, right, to throw out. 80% or 4 out of 5 agencies are
Hmm.
under 1.25 million in revenue. Okay. So that
Okay.
means 4 out of every 5
Yeah.
agencies that you meet or run across will be making less than $1 million of revenue per year. Okay.
Makes sense.
When you hear stories of agencies that sell for 3, 4, 5, 6 times revenue, those are often deals that are publicized
Hmm.
that are at a much larger scale. And there's a key difference between a financial buyer and a strategic buyer. Okay.
A
So
strategic buyer would be me, right?
no, no, no. It depends. So
Okay.
yes, strategic buyer you. So like an agency buying another agency, that can be categorized as a strategic buyer. Yes.
Or a financial buyer would be like a hub or like a big conglomerate that's gonna acquire. Okay, go ahead.
Nope. Opposite. So strategic is someone who's trying to acquire to gain intrinsic value or add additional value to what they're currently doing.
Got
So
it.
like for example, it's the big example that it's just recent. Aon bought
Mm.
NFP, right? You can find the articles, you can find the press releases. They even have the purchase prices that they put in there. Okay.
What was it roughly?
So in gross, it's estimated that they're paying 6 times top line revenue, which is over $13 billion. But here's the kicker. Here's the kicker.
Crazy.
When you dig into the details, it's a cash price
Mhm.
of right about 3 times revenue.
Cash.
And then the additional is Aon stock that's likely paid out over a period of time to the owners of NFP. Okay. But even then, the 3 times
Wow.
revenue, if you read the fine print, they don't expect that to cash flow for at least 2 years after the agencies continue to grow. So
Okay.
to get
Uh-huh.
a little nerdy, you can go
No, no,
look
no.
at
This is
Aon.
good stuff, man. This is the nitty gritty that people need to hear too. So
Well, and then I'll explain to you why this might be different than, say, like a local hometown agency buying another one. Okay.
sure.
And so if you go back and look, Aon stock took a price dip that day because investors know they overpaid. That's just
Mm,
that's an opinion, right? That a lot of people have.
makes
And
sense.
so, but now compare that to talking to a local agency owner. They say, I want 3 times revenue for my agency. Okay. Well, the difference between a strategic buyer and a financial buyer are going to be if you give or sell to your family member or
Hmm.
an employee or someone who doesn't really have a lot of cash or assets to support that purchase, the affordability of that is going to be very different than someone who already has an established, profitable agency or even has assets that they can invest to make that affordable to them. Okay.
Right.
An agency is valued on its profit potential and the risk profile. Ideally, you want more profit, less risk. That's your
Of
valuable
course.
formula. If you
Hmm.
have low profit and high risk, would you buy that agency?
Probably not.
Probably not, right?
Yeah.
So that's why agency owners come to us to get evaluation done because we kind of do that assessment as part of the due diligence process. Figure out, okay, what's the reasonable profit that's available to an owner? And then what's the risks that are present? Are they really good at certain things or are they really sucky or bad at other things that are really
And
important to you?
when you say that, like, what risks, like, what are they sucky or good at? Like, what are you talking about exactly?
Data integrity,
Got it.
right?
Yeah. See,
I
that
said that
could be,
earlier.
that also is for me personally, like that affects the value of my agency if I don't have really good number, clean, you know,
That's a big thing right now, and I'll tell you
everything.
why. So, like, it's very common to where agencies are up for owners who want to retire, they want to get out. It's an agency that's been open for a long time, and they've still got all the filing cabinets behind them that they
Hmm.
put all
Yep.
the client, all that stuff into it. Versus, say, an owner that's fully paperless, they utilize our agency management system really well.
Right.
Here's the thing: is like in terms of knowing what's in that book of business, it's way more difficult to verify the information that is being claimed by that owner.
Of course.
The
Of
more
course.
certainty, the more certainty you have about how that agency operates and what's present, that's going to be a huge difference in confidence for you to be able to buy that agency.
For sure. Also, just want to make a point for anybody who's watching as well. Your book of business, when you're making sales, a lot of times, especially newer agents, are just thinking about like the commissions that they're going to start making. Like, oh, wait, how much commission do I make a month or whatever? Like all those things. You also have to keep in mind, like, those are you every time you bring in a client on your book of business, that is also tech, quote unquote, like equity in your asset that you're building as you can eventually sell. So that is something to keep in mind. And also, one thing that we did, I think we've been doing in the last year and a half, 2 years, we started bringing on VAs that are like
Mm,
dedicated service VAs that are really just in charge of the management system, making sure every policy's there. If they cancel, like they're canceled. If they're renewed, they're renewed. If there's a commission, tracking, like all
yep.
those things. Like it's very hard to do that if you're wearing all the hats. So getting a VA or getting somebody who's very detail oriented, I think that's a proactive thing that a lot of other agencies should do. I don't
Yeah.
know. What do you think about that? Is that like something you would recommend too, or
Well, that's key. So even if you weren't
yeah?
having the conversation about buying an agency, right? Like for your sake as a manager, isn't it a little valuable for you to know what you actually have,
Oh, totally.
right?
Yeah,
And
100%.
then other ways that can translate, not just again to buying agencies, but for you to know, okay, what's your client mix? What's in your book of business? Who's
Yeah.
your ideal client look like? What's your penetration on being able to upsell or being able to offer additional coverages to these clients? Right. There's so many other ways you can use that data for performance things that knowing, like I said, knowing your own numbers sets you apart from so many other agencies that, again, they just sell, they get their commission checks, and then they go fishing or play golf, right? Whatever they want to do, right?
Right. I
So
mean, yeah,
yeah,
you can just make better strategic decisions for growth and then forecasting and also high, I mean, everything about it, you're just going to speed up your efficiency in the growth.
That's why it's called a key performance indicator,
Yeah, that's
because
interesting.
it indicates your performance in certain areas.
Hmm.
And in order to be able to change, increase, or boost performance, or even make changes to shift your focus to somewhere else,
Right.
you need to know what those indicators are telling you and how you're performing in those areas.
For sure. So what does the actual process of, purchasing an agency kind of look like? What are the kind of steps? First things first, like you got to just have a lot of eyes on different books, right? Like you got to just be looking, or before that, before we dive into that question, is there a difference between buying an agency and buying a book?
Yes. Yes. Yeah, there is.
Okay.
So, a little technicalities, but yes, there's a difference between what we call an asset sale versus a stock sale.
Hmm.
Or there are ways to kind of structure the deal to where you can have one or the other or parts of the other, et cetera. But yes, there's a difference between buying an agency and the entity itself. So like the stock of that agency. So like if I had to ask you, like, how's your agency set up like legally? Is it an LLC? Is it an S corp? Like how are you set up?
It's an LLC designated as an S corp for tax purposes.
Right. So likely in your shareholder agreement, right, or your operating agreement, you probably have a designation of so many shares that you are the sole owner. Or if you had a partner, they have certain percentages of those
Sure.
shares, et cetera.
Yep.
Right.
That's
And
correct.
so the entity owns the asset of the expirations of your policies. The state designates that you are the agent of record on those policies. And so the LLC or the S Corp legally owns the rights to negotiate, solicit, and sell insurance to those customers. Okay.
Okay.
So to your question, selling a book of business versus an agency. So if you
Hmm.
bought an agency per se, likely that could be structured as a stock sale to where whoever is buying your agency would purchase your share interest in your corporation.
The whole entity,
The-
100% of the shares or whatever.
exactly, exactly. Which then gives them the rights
Interesting.
to all the assets that are associated with that company. Okay.
Wow.
Or depending on how you
Contracts as
structure,
well, all
right,
that
depending
stuff.
on how you structure the deal, right, what liabilities or assets are included as part of the deal versus a book of business transfer or book of business
Hmm.
sale. In some cases, an agency owner buys a book of business, which is an intangible asset. You're not physically buying something,
Right.
but what you're buying is the rights to the financial value of those policies to be transferred from that agency to yours.
Right.
So the entity could stay as is, right? And then you, as the owner, could either close it, do whatever you need to do with that entity, that S Corp, LLC. And then that other agency, when those policies renew, they sign forms with the carrier that says you transfer these policies from this agency code to this agency code. They
Right.
transfer it over, and then they purchase the asset, right? The intangible asset of those policies.
What's the point of buying the agency versus buying the book? Like, why would you buy an agency over buying just a book transfer?
It really depends on your goals and what you need out of the deal. And so if you are, for example, right, a very large agency, it's very hard to just close shop and transfer all the policies. There's going to be a 6 month, 1 year, 18 or 24-month transition period in order to make sure that that's smooth, or you can have a good integration plan. There's a number of different factors around it. Or if it's an owner that's retiring, they've got their own book of business that, they're not doing anything with their agency, or they run their agency out of their house, right? You're not necessarily needing to buy. Or here's another example. If that agency has a history of E&O claims, right? It could be tied to that entity, right? There could be other
Mm,
liabilities that are tied to that entity that you may not want to assume.
sure.
So there's a number of different, either
Got it.
legal
Got it.
or structural or even tax purposes, because those transactions can be treated differently for tax purposes. Buying stock in a company is very different from buying an intangible asset from someone. And so usually in these situations, we always try to give people the advice of, hey, you need to not just work with us, you need to work with a good attorney,
Yeah.
a good CPA who's also a good tax advisor to really structure that deal in a way that's mutually beneficial or advantageous for both parties.
Yeah. Totally, man. As far as like the Aon, for example, like the Aon purchase, and who did they buy again? Sorry.
NFP.
Okay. Was that like that was, what is that? Is that that's a purchase of the agency, right? The stock of the whole agency?
In most cases, something of that size, yes, they acquire
For
the
sure.
ownership interest in that agency, and then over time they'll probably merge them into Aon, or they assume that like those tax ID numbers as part of their subsidiary as a company. Right. There's a
Got it.
number of different ways I could do it. Yeah.
Okay. I was just curious. For a little guy like me, Kobe, what would you say is the best way to purchase a book? To purchase, should I purchase a book? Should I purchase an agency? Obviously, there's a bunch of, factors that go into it. Um, and also kind of like a caveat to this, like, what if you don't have a lot of cash to buy an agency? How would you do that?
So here's another wrench in your question, right?
Sure.
I would encourage you to, before even having that conversation, to establish yourself. What is your actual goal?
Hmm.
And then what are the ways that you establish or put in the mechanics of that growth in the most efficient way or the best way for you? There's some agency owners that can sell faster than they can purchase.
Right.
There's some agency owners that have their customer acquisition cost way lower than it would cost to purchase a really good book of business.
For sure.
Bradley Flowers in his podcast, right? The
Yeah.
Insurance Guys podcast. He's mentioned several times, like, actually, when you analyze a deal, you should probably analyze, like, if I invested this much money into marketing spend or developing my team, can I get a better return than buying this other agency?
Dude, totally. That's crazy. Especially if you got that stuff dialed in. Like you should 100% run those numbers.
Yep.
And honestly, that's a good question for me. Like what I would love to like look at a comparison of what if I dumped 50 G's into marketing and hiring more
Yep.
or 100 G's versus like buying this book. Like which one's going to give me more money faster, like that's
Or here's another spin. And
sure.
some people told me this comment's kind of abrasive, but I'll keep saying it.
Uh-huh.
But like when an owner usually comes to me and we're trying to figure out their valuation and we talk through that process and we try to, figure out, okay, what can we reasonably negotiate? What's the scenario? And they say, well, I want this asking price. I'm like, okay, well, if you want this asking price, you're trying to compare yourself to Gallagher, Brown and Brown, these other very big national agencies and their
Yeah.
valuations. Do you compete with them? And they'll say, yes, like I take their accounts all the time. I'm like, okay, well, do you also do these other services? Do you do these other things? Like, are your operations as buttoned up as theirs are? Right. There's a lot of risk factors that go into it. And then I'll throw in just kind of caveat. I was like, okay, well, if I had this much money, let me look at Gallagher stock. Okay. Go analyze Gallagher stock or Aon stock or Brown and Brown stock and their performance over the last few years. Actually,
Yeah.
if I put that same cash in their stock, I would get this return. Could you do this return with your agency?
Yeah.
It's a different conversation, right?
Yeah.
But to answer your question directly, even though I kind of skirted around it,
No. It's all good. I like that.
the
Yeah.
the goal as part of that process is to really, again, know yourself, know your agency, know your numbers, and establish what we call a buyer profile,
Hmm.
to where you try to identify, okay, these things are very important to me as part of my agency, my culture, my sales process, or my ideal client,
Right.
to try to give you an indication of, okay, well, if I talk to this agency, okay, these two or three things are aligned. These are very good. Like this will be a good fit. But there's these other things that are pretty difficult to reconcile, right?
Like what though? Like what do you like? Can you give an actual like real life example on those?
Sure. Really easy example would be like an agency that specializes in personal lines versus one that is commercial.
Got it.
You might think, and this could be a good opportunity, like buying another agency that does commercial to get into that space. But here's something to
Yeah.
consider. Here's something to consider. One, the valuation is going to be a little different. There's going to be a lot of factors that go into that. The service model for commercial is drastically different than personal.
Oh, yeah, totally.
The staff experience for commercial is drastically different than personal. And
Sure.
so there are certain things that have to happen for that deal to make sense and to
Hmm.
transfer well for you in order for it to happen well.
Of course. Yeah.
So if you're not able to retain those staff members, or if the owner was like the key producer that maintained all that relationship and he just wants to bounce and go to the beach, right?
Yeah.
Like it's knowing who is kind of your ideal profile for an agency that you could reasonably have good integration with and have a good process to bring them on board.
I mean, is
That
there
does that
ever a
doesn't mean you can't
time?
turn around a bad situation, but
Yeah.
the work of integrating an agency, people always think about buying, right? I'm going to buy, buy,
Right.
buy, buy.
Right.
What you don't often hear people talk about is the 6 months, 12 months, 18 months after you buy an agency, what's that integration look like?
Yeah, what does that look like? What have you seen, Kobe, from that? That's like I'm so curious to know that. Yeah,
Oh man, so many things, so many things. Um,
like I'm sure there's some massive pros, there's some pretty, serious cons.
yeah,
What would you say are like the top kind of three positives or something along those lines? And then like, top three negatives that you would see from those extra, those 6 to 12 months after the fact.
sure. Usually the two key things that keep any deal together or break it are going to
Hmm.
be knowing beforehand and then having a plan for how do you integrate new people,
Okay.
new staff
People.
members. So if that other owner is not staying on board and you now, right, are the sole owner that they report to or that,
Hmm.
you're going to have oversight in how they do their daily job now.
Yeah.
Do you have good rapport with them? Are they on board with the mission or coming on board with you? Because we've seen deals where, everything was looking like it was going great. And then up until the last minute, there's some staff members that were like, yeah, I'm not doing this. I'm going to retire in 2 years. I'm just going to retire early because I don't want to go through this process.
For sure.
Or,
Why would you?
or another producer at that agency. They think, oh, this is my opportunity to get out and do my own thing. And then that producer tries to leave. And right, staff and retaining employees is huge
In a transition.
in a transition. Yeah.
In
That's the thing,
general.
man. Because I
Yeah,
mean, other than your insurance policies, like the biggest asset that you have are your people.
for sure. I mean, you invest so much time, energy, money, training, all that stuff, and yeah, for them to just walk, it hurts.
Yeah.
Definitely, it's a big
It,
investment.
it's personal in a way, because
Yeah,
some people, their employees are their family. You spend so much time with them. It's a big part of your life.
without a doubt, without a doubt. So
Um,
that, so I'm sure there's also like the pro side of that. Like when you bring on staff and it works well,
yep.
obviously that you're off to the races. But so you would say like that's the number one kind of like challenge you would say though.
People is usually, yep. The other
Okay.
one is, I don't want to say it's at the same level, but it's also crucial is the carrier contracts. That's
Yeah, what's up with
often
that?
that's often a target. Usually people say, well, they have this appointment. I want to get this appointment.
Of
But if
course.
you're not having those relationships being developed, or that carrier often usually has a say whether or not they appoint a new agency owner or not
In a purchase.
in a purchase. Yeah. So go back and look at your carrier contracts. You're going to find a term.
Mm-hmm.
You're going to find a term that says you must notify us within 30 days of a change in ownership
Mm,
because they want to know what's going on with this agency. They signed
sure.
they signed a contract with Chris. They signed a contract with your agency.
Yeah.
If there's very real situations where, say, an agency owner used to have a contract, they got canceled, they got fired for some reason because they didn't have a good relationship with that carrier. They try to buy an agency down the street or someone else that has that contract, and that carrier is like, you know what? We still don't like you. You're still on
Yeah.
our X list. We're not extending this appointment to you. So you still oftentimes have the rights to those policies because you purchased the book of business.
Uh-huh.
But there's a huge difference in having to just change and update the appointment or a producer code versus now you have to remarket all those policies with that carrier to try to maintain them.
Yeah. Wow. Also, that kind of brings up another point in my head. When you're part of an alliance, purchasing also has, their layer of contracts involved as well.
Yeah.
How have you seen that be a challenge with like these purchases with some of the alliances out there, Smart Choice, SIAA? I'm sure there's even some with like the Bolt, like the smaller, kind of like the more like, direct, less paperwork. But how have you seen those impact a purchase process?
Yeah, yeah. That's a fantastic question. You know what? I'll kind of start this by saying oftentimes people have usually negative perspectives. A lot of people go to an aggregator or an alliance to get appointments and then have this idea that once I get big enough, I'll go out and get my own direct appointments. And so it's almost like they're using them to just kind of get started with the idea
Right,
that they'll eventually be independent.
right.
But I'll actually give some praise and to some kudos to some really good networks and alliances because if you have a good master agency,
Yeah,
oftentimes they are going to really invest in you, give you the resources, give you the appointments, give you the things you need to do to succeed.
for sure.
And the reason that you see terms around if you sell the agency, you have to tell us, or you sell the agency, we have to charge this breakup fee to you to cancel your contract. Those types
Right.
of things is because they do have a vested interest in your success.
Of course.
There's so many cases where agencies get to a certain point because that alliance or that network or whomever, they help give them the platform to do that.
Without a doubt.
And so usually, not to get too nerdy, oftentimes there can be some analysis that looks at a breakup fee or your monthly fees, those types of things are usually going to be the additional value that they bring to your agency. And so there's like a net effect to where if you were independent, you would actually almost be exactly where you are. And
Mhm.
so the breakup fees and those types of things, oftentimes they're a vested interest in your agency, but um, it's usually not overly penalizing. I'll say that. That's the way it's supposed to be designed.
Okay, that's interesting.
But directly to your question, yes, if you go to sell your agency, they have a similar thing in the contract to where you have to notify us of a change in ownership or your interest of a change in ownership because they might want to buy the agency
Right.
themselves.
Like the
Or,
first right of refusal, right?
yeah, first right of refusal. Or in order to protect their interests, they might want to be part of the process to help you find someone to buy it that's within the network because they want to maintain that book of business within their network instead of it hopping out completely.
They probably would too. It makes the most sense because it's yeah, they're already with their same carrier appointments. Like
Yep.
they're got the bonus structures all tied in.
Yep.
Um, and yeah, dude, I want to just second what you said. Without a doubt, like I'm part of SIAA, and I think I'm a believer in SIAA nationwide, but specifically our group, like I got super lucky because I'm not even like I'm like in a weird sliver of Los Angeles that got lumped into like the group that's out of like San Diego.
Okay.
And our group, especially the resources, like I definitely would not be where I'm at right now without those appointments and like some of those relationships and their investment in me. So yeah, I'm a big believer in it too. That's why I asked these questions too. I'm like, I have no real desire or anything to sell per se right at this moment. But it is always like interesting with those contracts, like knowing like what would that actually kind of how would this actually play out if and
Yep.
how would I maximize my top dollar? Like, do you get top dollar if they're gonna buy it first right of refusal? Like, how does that work? Like, what would the sales process look like there?
So it depends. You need to read your contract with them because they
Yeah.
may have a defined formula that they offer you a buyout.
Hmm.
That's a thing that's very common. So they'll say, "Hey,
uh,
we have right of first refusal. If you want to buy from us, this is what we offer." Usually it's a flat formula.
yeah.
Or they say, "If you do get an external offer, we also have the right to be able to review it and match it if we want to." So there's a couple different ways it can go based on what your contract says.
And why would you ever like not take that? Like, why would you say like, no, I'd rather just sell to the guy down the street? Like, instead of, I mean, maybe because of the relationship or something. Like, is that pretty much it?
It depends. It depends. Or if you can get a more attractive offer outside of what their formula is,
For sure.
that
And
can
then,
happen.
yeah, which I'm assuming there probably are people that are willing to go above maybe their formula. But um,
Yes.
so Kobe, if you were to like actually say like today, I want to sell my agency, where would you start? Like, how would you go about doing that? Like, what do you recommend, or how would you suggest somebody like me to go and do that?
First, I would say come to us get evaluation.
Sure. Yeah.
So, and even if it's not
Hit up
to,
Kobe, everyone.
yeah, um, even if you're not ready to sell, I would say actually going through evaluation process, it gives
Mhm.
you huge insights and huge leg up into figuring out, okay, when I do get ready to sell, what information is a buyer going to ask from me?
Sure.
What do we need to have ready? What do we need to have on hand? And so actually our evaluation process, we ask for a huge list of all the same things that a buyer would ask for in due diligence.
What do those kind of look like? Just so people
Sure.
know.
Historical financials,
Uh-huh.
a book of business report,
Okay.
a list of your employees, usually with date or like data around like when were they hired, what's your turnover been for the last couple of years, right? A
Mm,
lot of questions around your employment, tax returns, usually to
mm.
verify income or a couple of the things, and then also any terms or any contracts that would affect the sale of the agency. So pretty much all the stuff we talked about today, right? Having
Yeah.
good, having good, clean financials is going to set you apart. Having good quality data integrity and a good book of business is going to set you ready. Having good relationships with your employees, you have a good employee roster, and then also the contract with, say, SAA or any other
Yeah.
network or any other thing that would impact the sale of your agency we want to know about, because that can affect evaluation. So
And then let's just say all that checks out. You're like, okay, Chris, boom, you're worth like 25 mil. I'm like, all right, Kobe, let's sell it off.
you're selling yourself short, man. You need more.
Oh, and then I'm like, okay, now what? Now do I just like list it up on like I know agency equity is like one of the common ones, or like
Yeah.
how would you market that out? Or like do you guys advise on that? Like what to do next on that?
Yeah, we do. Yeah, we give people advice on, one, first assessing what their situation is, and then having conversations with the owners around, okay, here's what we commonly see. Here's what we typically would advise people to do in your situation. That's another thing too, like to go back to something I mentioned earlier. What are your goals for selling? Okay.
Of course.
Is it to
Yeah.
maximize your retirement? Is it to transition to someone locally, right? Figuring out what they want to do is going to impact the valuation
Hmm.
and how we kind of give them the advice and the consulting to go from there. And
Yeah.
so, yeah, it depends on what you want to happen as to kind of the advice and the assistance that we give from that point on. But
What's been
there's a
oh,
many
go ahead.
different options. Okay. So
Sure.
like another key distinction is we don't act as a broker.
Right.
I don't actively source deals for agencies that are
Sure.
wanting to buy or sell. Okay. There are brokers that do specialize in helping agencies buy or sell. And so a
Of
key
course.
difference for us is like we charge a fee for our service as a consultant. A broker per se, they may not charge a fee to do evaluation, but if you work with them, they charge just like a real estate agent or so any type of broker, they'll charge a commission or a success fee by helping you find the ideal buyer to maximize what you're trying to accomplish.
Hmm.
So you can work with a fee-based advisor to help give you advice through the process. You can work with a broker that will help you figure out to find buyers and kind of navigate that process through closing.
Hmm.
A couple of ways you mentioned agency equity, right? That's an option.
Yeah.
Another agency marketplace that's up and coming that we actually recommend a ton and partner with is Cake. I'm sure if you've seen them or
Cake.
not. Yep. I think the website is haveyourcake.com. But if you search Cake Insurance Agencies, their website is an online marketplace where you can list your book of business for sale, or you can sign up as a buyer and like create a buyer profile and try to find
Yeah.
agencies that are available.
Honestly, that's great, man. I feel like that's an under like developed part of the insurance industry is like the actual buying and selling of these agencies. So hopefully Cake, I'll definitely check. Shout out to Cake. Sponsor us if you guys want to sponsor us. I feel like, yeah,
Um,
dude, I don't know if you think the same way, but I'm just like, I'm on like a Facebook group that's like people trying to, this thumbs up thing again. The
I think
Facebook
it
group,
I think it
which I
reads
think I'm
you and
like,
then
what?
I think it reads you and then like copies your reactions. Let's
I've
see.
noticed that. Yeah, it's been doing that on my phone when I FaceTime people. It's the weirdest thing. Also, if
Didn't
you
do-
like go like this,
Yeah.
it like throws like a, oh damn.
Oh well.
Yeah.
Now that
Whatever.
we want to do it, it's not gonna do it.
I know, right? But yeah, I mean, dude, that's so yeah, okay, Cake, and then what else? What else would you recommend?
There's a couple different brokers that I can share with you. Actually, I'll email them to you. You can probably list them in the show notes or share with
That'd be great.
your subscribers, whomever. But yeah, working with a fee-based advisor to get advice and try to navigate the process, working with a broker that can help you through the process, or like I said, going to an online marketplace.
Mhm.
Now there's also differences in like, you got to work with an attorney, you got to work with a good, tax advisor again to try to figure out what
Right.
the structures are looking like. But yeah, it's not an easy process, learning the first time, but it's important. So I think a lot of people,
Totally.
rightfully so, like you're asking, right? Start asking the questions before you get to that point so you can try to learn about it.
Yeah. Yeah. As far as your guys' services, Kobe, like what do you, I know it's probably different for every type of, big giant customers and then smaller agencies. Um, what do you usually charge for something like that? Or how do you go about, do you just evaluate based on people's size? Is that how you give people rates, or is it hourly, or how do you guys usually do things?
So we have an hourly consulting rate,
Okay.
but I will say the pricing is completely based on the project.
Got it.
And so I'll say as a consultant, I don't want to give you my hours, but
Sure.
it is to the point where like we have an introductory call. It's a sales process. We have an introductory call to learn about the owner, their agency, what they're trying to accomplish, and then try to figure out, okay, well, we can help you do A, B, and C. Here's what our time commitment is. Here's the resources we're going to use, and here's our estimated project cost.
Sure.
And so that can be, just for example, a valuation, a very basic valuation could be $3,000, $4,000
Yeah.
versus some agencies, if they hire us as a CFO, right, we'll charge a starting fee to kind of get up to speed and learn everything we can about the agency to get going. And then there's like a monthly or quarterly retainer as a consultant. Again,
Got it.
that's going to be varied based on, what we're working for them, the things we're trying to
Yeah.
accomplish together. And so, or we can work it small down to, I can help an agency set up a budget. If you don't want to do a full CFO engagement, we can help you just look at your books and set up a budget for you
Yeah.
if
Yeah.
that's something you've never done before.
I mean, man, it's so important. Like my wheels are turning like crazy right now. I'm like, dude, knowing your numbers, even just having a budget, even just personal budget. Like people can't even do their own personal budget, which I'm guilty of too. Like there's definitely times where I'm like, I have no idea how much I spent this month, you know,
Yeah.
personally on my own stuff.
Yeah.
Um, so yeah, I mean, if you're failing to plan, you're gonna plan to you can plan to fail, right? That's what
Dude,
they say.
dude, that's one of my favorite phrases. So
Yeah. I'm sure you're probably, I mean, this is like your bread and butter, man. You're making plans and so yeah, I think that's having the direction um and then I just one more thing I wanted to point out or kind of circle back to. Is there a way to buy books or buy an agency without any capital? Because I've heard people say that, like you can get it like zero down to buy an agency or a book. Is that possible?
here's another thing too. When you buy an asset, any type of asset, right?
Uh-huh.
There's different ways to structure that deal. And that's going to
Sure.
be based on, yeah, what you have on hand or the type of assets you have available to support that, but also the seller's motivations or the seller's needs. We'll say that too. So the way that the financing is structured can be anywhere between you have to get a traditional bank loan or you can get an SBA loan
Mm-hmm.
from a bank, right?
Hmm.
Or the seller is willing to assume a seller financing note. And so they'll hold the note themselves and you pay them, monthly or semi-annually, quarter, whatever the terms are of that note. And that could be zero down, or they can require, okay, I need 25% down and then I'll seller finance the rest. Even
Right.
for traditional bank note, in most cases, affordability is a huge part of how a deal goes through. And so
Right.
all, not to make a side comment, but also to the risk that are present and part of that evaluation can also affect how an offer is made. And so here's an example. You can have two different ways a deal can go down. One can be the seller is going to require all the money up front because they want to get out, right? So
Right.
that buyer might have to get a
They just want
traditional
a
bank
lump
loan.
sum, you're saying, like they want the whole
They want a
chunk.
lump sum. There's no retention clauses. There's nothing like that. So they want to get their payout and make their other investments.
Yeah, yeah.
And so that might have to be a SBA loan or a traditional bank loan or whatever the financing means that buyer has to come up with to
Is
make
gonna
that
get
happen.
the lump. Yeah.
Right. Versus if it's a very risky deal
Hmm.
or it's a relatively small book of business, some buyers will actually offer, hey, I'll structure out, here's a guaranteed amount, but I'm going to pay it on commission as earned. So I'm not
Mm.
giving you anything up front, but I'll pay you monthly as these policies renew up to a certain amount. So kind of to your question about zero down, there are some deals that get structured essentially almost as commission payments. Because if there's a lot of risk in retaining those policies, it's almost like they're trying to hedge their risk of, okay, I'm not going to give you a ton of money up front, but I'll pay you if you help me renew these policies and I'll give you X% up to a certain amount or whatever the timeline is.
In exchange for just taking over
Correct.
I mean, wow, that
So essentially they hire that former owner as an outside producer and they pay them commission as the policies renew based on whatever the terms are.
that sounds like an amazing deal if you're not putting any money up front.
It's actually not uncommon. We've seen it sometimes where an owner wants to retire, but they're not quite ready yet. And so what they'll
Yeah.
do is they'll transfer the book of business to another agency and then they set up a seller finance note to where they get essentially a commission payout over a period of 2 or 3 years based on what those terms are until they're actually ready to retire.
And then they get more money, or is that just it?
It depends on what the terms are. So they can get maybe a payment up front and then they get like a very high commission rate or a certain commission rate over two
Oh,
or
that
three
makes
years
sense.
or whatever the terms are, right?
Wow, that sounds like a great deal.
Yeah.
Yeah, it's so many different ways to do it, huh? There's a lot of different.
I'll say that's the beauty of living in America, right? It's freedom, baby. We can structure whatever we want, how we want it, as long as it's legal. As long as it's legal.
As long as it's legal. Well, yeah, man. No, that's really, really good stuff. Kobe, I want to be respectful of your time too. I know we've been on here for a little while here.
It was a great conversation.
And I honestly, dude, I think we could really, there's so many deeper levels to this that we could even keep going. I would love to do it again, maybe even kind of go further into some of this stuff.
Sure.
And then personally for myself, like I definitely will be talking to you and seeing what we can do. Cause like I said, yeah, man, if you're not, planning these things out, you're not, you need to have a clear vision and have a plan. Because yeah, I always say to my team and stuff and people around me, it's like a ship leaving the harbor. If it doesn't have a map or destination, it's gonna most likely end up lost at sea or end up on the rocks. So
Yeah.
if you don't have a plan, I have my rough plan right now, but I really think it would be a lot better to dial that in with you with real numbers and having like budgets and having those numbers. So if you're open to it, I would love to, talk to you personally myself.
Yeah.
And then anybody else out there watching, hit up Kobe if you're interested in something, building a successful agency at this point. That's the best way to put it. I think you really should talk to someone like you. I didn't know your position even existed, so I'm really excited that we're on this call right now.
Well, I think the other reason I reached out to you is because like the comment I shared was like, even as a
Yeah.
consultant, I'm 35, right? So I'm not old. I've got a beard, but I'm not old. But there's some consultants that aren't quite there yet, but there's a lot of consultants, just like in the industry, for agency owners. People are up in age, they're ready to retire.
Oh yeah.
And so there's a huge opportunity, I think, not just for ownership. So I think, again, kudos and praise to you, man, for doing what you're doing.
Oh, thank you.
Somebody who's young and aspiring and driven to want to take up ownership of something like this is huge. And so
Thank you.
try to do the same, right? I'm just not an
Yeah.
agency owner. I'm a consultant to help agency owners, but I'm young, trying to carve my way, and hopefully we can do good things together. So
Yeah, totally. Sounds great, Kobe. Where can people hit you up if they want to get a hold of you?
sure, I am very active on LinkedIn. So if you want to connect with me on LinkedIn, I'm always open, and send me a message, or my email is probably the easiest way. It's Colby, Colby at agency-focus.com. Our website's the same, agency-focus.com, and we have a contact form. You can reach out to me there. So
Cool. Sounds good, Kobe. Well, thanks so much, man. This is probably one of the best interviews that I've done. I've gotten a ton of value. I think a lot of people are gonna, yeah, hopefully, you never know, man. Whoever watches this might just sit there and actually change their lives. Like they might buy a book or buy an agency, and after talking to you, maybe that could be. It's crazy to see what really can happen from some of these talks. So I really, really appreciate everything you've shared. And yeah, man, looking forward to it. Hopefully we can take at least my agency to new heights and, work together. So really appreciate it, man.
I heard you say 25 mil, so we'll set a goal and we'll get there. So
Yeah, that sounds good. I think so. 25 mil is a good number. I would be very happy with that number.
all right, man. Well, also thank you again for being
Yeah, of
young,
course.
being entrepreneurial, creating the content. That's how I even found you. And
Yeah,
like I said, you've inspired me to even want to start doing my own more stuff. So
dude, you should
we'll make
totally,
it
man.
happen.
We need this content. Like we need this information too. So yeah, for sure.
Awesome, man.
Well,
Cool.
thank you, Kobe. Appreciate it, man.
Thank you.
All right. Thanks so much.
All right.
That's it.